Thank you, everybody, for attending our 6th Town Hall meeting today, Monday, May 4th. And if I was a funny man, I would insert a Star Wars joke here, but we'll leave that to Brandon if there is one. We do hope everybody had an enjoyable weekend. Today's Town Hall, we're going to be joined by Matt again. He's going to be reviewing updates to the PPP, the Paycheck Protection Program. We had an open question on tax credits, which he will be reviewing. There is a Main Street lending program he'll quickly go over. And then followed by Matt, we'll have Dennis and Diana. They're going to continue the discussion on reopening, just some thoughts too and strategies. I do anticipate today is going to be just under an hour. And then for next week's Town Hall, I'm going to delay scheduling that. We're going to schedule that in the future, might be 2 weeks from now based upon how information is changing. And we have also kind of changed strategies where we're taking these videos and the town halls and we're dividing them up into smaller sections and we're placing them on our website in the blog section so that they may be referenced at a future time. And I do understand, just talking to some clients today, that is fast becoming the preferred method of viewing because they can do it on their own schedule. So that will be available probably shortly. I think we have the last week's meeting already up there, and I anticipate the prior meetings will be up there within the next couple of days. They're currently being worked on right now by our professionals. Please do continue to send questions to info@arkwood.com. I got a few in this morning. I'll try and incorporate them into the meeting, but I think most of them will be answered. And then finally, for quick disclosure, Arkwood Financial LLC, Arkwood Benefits Consulting Inc., and Arkwood HR LLC, we do business obviously as Arkwood. We are independent companies of which we don't offer legal or tax advice. Our goal is to provide the information to you for assistance in making decisions for you and your company. And with that, we will leave the legal and tax work up to those professionals. So with that, I would like to turn this over to Matt Hatfield from Lohm & Company. Matt, are you on the phone? I can see you.
Now can you hear me?
Now we can hear you. Yes, thank you, sir.
So I have
Good morning,
two ways
sir.
to
Good
mute.
afternoon, to you, sir.
Yeah, I have two ways to mute my participation, and I only turned off one of them. So we got that going for us. I guess it's a Monday. So with that, I'm going to be very brief today. So there's a few updates, and if you can just go to our bullet points. So the update on the Paycheck Protection Program, this actually came out in the Business Journal this morning. If you guys get the updates, money is still available. I'm actually I'm surprised by that. And maybe it is possible because some of the big companies are staying out of the money, but there's about $135 billion still available. Many banks are not taking applications right now, primarily the big ones, I understand. But there still are some of the smaller banks that are taking applications, and so if you haven't applied or you're not getting where you need to get to with your current bank, I would suggest looking for different sources. Again, that Business Journal article mentions Desert Financial, which is the old Desert Schools. They mentioned another Washington-based bank, but there's a lot of lenders out there. So I would say kind of push that because who knows how long that's going to be available. The IRS did something a little bit interesting this last week in that they clarified the tax deductibility of expenses that are used to calculate the loan forgiveness provision. So I know that's kind of wordy, but in the first interim final rule on the PPP, it was very clear that any forgiveness of the loan would not be taxable. So generally, when you have a loan forgiven, the IRS wants a piece of that, and they'll count that as taxable income, and you have to pay your fair share of taxes on that. But they came out and said in that interim final rule that no, any loan forgiveness under the PPP is not going to be counted in taxable income. However, the big question mark was, what about the expenses that are used to justify your loan forgiveness? If you remember, it's payroll, 75% of the loan proceeds to be used towards payroll, the other 25% for rent, utilities, mortgage interest, what have you. And so what the IRS came out with last week, and they said, based on precedents, which I don't have to get into all the case law, and that they're decided in tax court, that these expenses would be similar to the expenses that were in these previous cases, in that they would not be deductible for tax purposes. We don't believe that that was the intent of the act, and so it's interesting that the IRS came out there and stated that. But I think there's some opening, maybe the door's open a little bit as to what's going to actually happen, and that's really when the Treasury, Mnuchin and company are going to start clarifying the loan forgiveness process. But just know right now that means that those expenses, and again, it's 8 weeks of expenses at the calculation period, would not be deductible on your next tax return. Any questions on that one, Pete? Do you have anything to add, or was it clear?
No, yeah, I thought that was clear. And probably just the one thing I would add is the list for the qualified financial institutions is updated regularly. And so if anybody wants to find out if their bank, if they were not listed on those lists before, again, I would just normally go to the SBA.gov website, and then in the menu button, click down to SBA near you, and then you can type in, Phoenix, et cetera, or whatever local city you're in, and it'll bring up the local office, which then they can click on the website and then download the local branches that are located in that zip code. Because I know, as you mentioned before, is that Desert Financial is now on there, and they weren't down there, I think, last week. So there have been some changes.
Got it. All right. Next item is the Main Street Lending Program. And really the reason I bring this up is because we mentioned on last week's call what this program was. And what we gave you last week was current as of that time. Well, of course, there was a change made over this past week. And really, I believe what they're attempting to do, the Federal Reserve, and that's really what this falls under, is the Federal Reserve, they are attempting to widen who this loan program is available to. And really the big changes, I won't repeat what we talked about last week, but the big changes are really that they increase the employer size of eligibility from 10,000 employees now up to 15,000 employees. And then they increase the revenue size of the company's revenue from $2.5 billion up to $5 billion. So you're squarely in Fortune 1000 territory when you're talking in that $5 billion range. Probably the bottom of Fortune 1000. Well, who knows now with the COVID, but it used to be about 1.8, 1.9 billion was the bottom of the Fortune 1000. But clearly they're targeting up to the Fortune 1000, maybe not the very biggest companies. But then they did something interesting, is that they dropped the minimum loan size, which was putting a lot of smaller companies out of the picture. And the minimum loan size was $1 million, and now is decreased to $500,000. Interesting article I read. The American Banking Association said that this is a good start, but if they really want to make this program available to a wider base, then they really need to drop that minimum loan size. So who knows if that's going to happen. One thing to note, this is not live yet, meaning no companies are getting loans under this act yet. And it's really not even an act. It really came out of the CARES Act, but empowers the Federal Reserve to create this pool of money to basically fund these loans. And the other thing to note is, if you got a PPP, you're not disqualified from this particular program. That's it on the Main Street Lending Program.
And that's any size employer up to the 15,000, right? So if I happen to have a company of 5 people with $2.5 billion in revenue, then I'm eligible for this loan.
Yeah, and there's some minimum income requirements, meaning net income that you had to have. EBITDA, it was $250,000. So some of the smaller companies may not qualify on that. One of the interesting things, and I still haven't gotten clarification, and maybe they're still working through that, it says you can't have debt. Well, I mean, what's debt? Is a capital lease debt? Is a credit card debt, a corporate credit card? If you pay it off each month, is it debt? I still haven't gotten real good clarification on that. So I would say if you're interested in the Main Street lending program, start talking to your banker about it, because the big banks will be participants in this. But again, it's just not live yet. So, and really, again, the main purpose of bringing this up is we wanted to correct the record from last week to this week. And I think that goes with almost anything any of us are saying is, new information is coming out and new rulings are coming out, almost a daily basis on a lot of stuff that we're talking about. So what we may have talked about 2 weeks ago, 3 weeks ago is not necessarily the right answer anymore because of clarification that's come out. So
correct. Thank you, sir.
Absolutely. And then this was a question from last week, the Employee Retention Tax Credit. I thought I knew what this was, and I think Pete and I were both on the same page what we thought it was. Let me tell you what it's not. It is not the delay of FICA taxes. That is something different. And if you delay your FICA taxes, you can take advantage of this, but you just can't use it on the same funds. Or the same qualified expenses. They have to be different expenses. So maybe it's you use 1 quarter of payroll expenses to qualify for this, and the other 2 quarters of 2020, you use the delay in the FICA but you can't use 3 quarters of delayed FICA and qualify for use one of those quarters for this. So, but this does exclude you you are excluded from this program if you have taken a PPP loan. It's one or the other. In a nutshell, what it is you have to meet a couple of thresholds, or at least one of 2 thresholds, to even be eligible for this, and that is if your business was forced to close or partially close by a government order, then you would qualify. That's one hurdle. If your business decreased by 50%, your net receipts decreased by 50%, then you would also qualify, even if you weren't affected by a direct government.
Hello.
Yeah, am I back?
You're back.
Speaking. Yeah. So if your revenue decreased by 50%, there's also a calculation. You kind of have to look at this. So I'd say if you really want to take advantage of this, then I would certainly talk to your tax professional. And there's a little bit more detailed calculation on that 50% decrease in revenue. But in the nutshell, what it is you get 50% of up to $10,000 in wages and qualified benefits for each employee, and that's in 2020, and that's really the maximum of the credit. So it's a $5,000 maximum per person, but you have to have it supported in those wages. So if someone doesn't make that much during that time period that you're looking to qualify for, then you obviously wouldn't take full advantage of the $5,000 per person. So it's one or the other again, PPP or this one. And again, you probably need to look and see what is the most advantageous, depending on the number of employees you have, as well as if you even qualify hitting the one or the one of the 2 criteria. So.
Okay, and then the FICA tax credit is again, I guess, a third. So you have the PPP option, you have the employee retention tax credit, and then you have the FICA tax credit. You just can't use the same source of I guess, expense to
qualifying wages. And I want to make sure and clarify, it's not a FICA tax credit, it's a FICA tax deferral. So you will still have to pay, so you will still have to pay them, but it defers it off into the future. And it's actually good. And then you pay it, you basically have a payment plan over time. I think it's over 2 years, 3 years. I can't recall off the top of my head, but this is a credit. The FICA is actually a deferral, but you'd still owe it. And the PPP, obviously, we talked about that. It could be full forgiveness if you meet the hurdles on how you spend your money.